how does entity choice affect things like retirement contributions, payroll, hiring family members?
Mm.
How does that affect
Yeah, that's a really
things?
good question. So, with an S corp, you you probably want to have a 401k. If you're not an S corp, there's a couple different kinds of retirement plans you could do, and it might all be about the same. So here's the way retirement plan contributions work. They are all they have limits for the amount you can contribute, and some of those limits are based on how much qualified income you have. So when you're a partnership or a sole proprietor creating self-employment income, it's all of your business profit, and the limit that you can contribute is 25% of your business profit into that 401k or SEP or whichever it is. And if it's a 401k, you can also contribute like your employee portion, even though it doesn't seem like you have an employee, but you're the employee in a self-employed business. So you can contribute 23,500 as an employee plus 25% of your profits. Now with an S corp, those S corp earnings are not self-employment earnings for purposes of making those calculations. So with an S corp, you're an employee of your S corp, so you contribute 23,500 as an employee plus the amount that the employer contributes is just 25% of whatever your wages are. And so we um, contribute to, like an example is, say if your reasonable comp is, just to make the numbers kind of easy to calculate, say your reasonable comp is $40,000, 25% of that's 10,000. So as an employer, you could contribute 10,000 into your 401k, and you could, as the employer, and you could contribute 23,500 as the employee. So in that case, you can contribute 33,500. If you had more wages, you could contribute more because it's 25% of a bigger number on the employer side. Now, to the total limit that you can contribute to a 401k is about 71,000 in most scenarios. It's different with different ages and stuff like that, but 71,000. And so, but it's never worth it to jack up your wages just to get that full 71,000 in there, because the employer side of it, you can always do the full amount of the employee side, as long as you're making that much money. And then the employer side, you can only contribute 25% of your wages. So you'd have to, it's not worth paying all those extra payroll taxes that you pay on wages just to get an extra 25% of that number into your 401k. So that's how it works for S corps. With regular just sole proprietors or LLCs without an S corp, you could do like a SEP and contribute 25% of your self-employed income, and it's all employer contribution. It's no employee contribution. You're limited to 25% of your income. So you might not you have to be very profitable to get enough in there to get to the limit. Like you'd have to make about $280,000 to max out that $71,000 limit. When you're sole proprietor like that, you can also have a solo 401k, and you could get to that 71,000 much easier, because you can always get 23,500 in as the employee, plus the amount that's limited by your income is only the amount above that, or the amount that the
It's
employer puts in.
it sounds very complicated. Okay, we're coming down again to that moment. You need someone really experienced to have that done, and then you're gaining.
Yeah.
Yeah.
Yeah. Now, one thing I kind of wanted to mention. So most of our clients, they start out with implementing a 401k plan. If they're really rolling and they're making more money, if they have more money coming out of their business than they need to live on, even after maxing out their 401k contributions, then we set up something called a defined benefit pension plan. And this all the limits are in a different way, and you can put about $250,000 per owner or per employee into these kinds of plans. So this is really great. Like if you have a client that's a husband and wife business, and they have some breakout year, say they make $1 million or something, and they have $500,000 more than they need to live on, then they can put 250,000 each into this defined benefit plan, take $500,000 out of that top tax bracket and save a lot of money. And in most cases, say if they're in Washington, it'd probably be 37%, the federal tax rate times 500,000.